Yes, people, a very, very happy afternoon to all of you. Thank you so much. What an energy. Now, so guys, up to last class, we've completed till example 7. We have learned how many working notes in total? 2 or 3? Only 2 so far? Okay. First one is AOP. AOP stands for Analysis of Profit. We are trying to analyze whose profit, holding or subsidiary. Are you sure? Okay. Why are we analyzing the profit of subsidiary? Because their profit we have to book in our balance sheet. We have to record them in our balance sheet. So we have to see that which part I should record, which I should not record, or where I should record. So that analysis we have to do. So always AOP is done for the subsidiary. Second working note is to calculate goodwill or capital reserve, which is also called as cost of control. To control the subsidiary company, what am I suffering? I'm getting net asset worth 1 lakh, but I'm paying 20,000 extra I'm paying goodwill. So that is the cost that I have incurred to have a control on that subsidiary. So hence the name is called as cost of control. So goodwill or capital reserve will be asked in question in exam as calculate cost of control. Calculation of cost of control in itself means what? Either you'll calculate goodwill or capital reserve. Okay, not okay. Okay. Now I'll continue with example 8, in which we'll also learn 2 more working notes today, which is how do we calculate minority interest? And next is consolidated reserves and surplus. With this, almost 50% plus consolidation is done. It says that balance sheet of H Limited as and S Limited as on 31st March 25. So this is balance sheet of which financial year? This is balance sheet of which financial year? 24-25. Okay. What is the share capital of H? 10 lakh. S, reserve and surplus of H and S. Current liability 5 lakh, 3 lakh. PPE 5 lakh, 6 lakh. Investment 10 lakh. How much percentage? 80 percentage. Can I say this 10 lakh is equal to face value? No, this is at cost. So this could be equal to face value or more than face value. So this is cost. Okay. Current asset 6 lakh, 9 lakh. Wonderful. Additional information says that H Limited acquired. They didn't get this allotted from the company directly. So the shares were originally allotted to somebody else. From that somebody else, we have purchased the shares. So we have paid money to whom? Company or the shareholder? Shareholder. Wonderful. H Limited acquired shares of S Limited on 31st March 25. How much percentage of stake have we acquired? 80% stake we have acquired. For that, how much we have spent? 10 lakhs. Wonderful. Assume the above book values represent fair value. What does it mean? If I go and sell the subsidiary company today, my assets will fetch 6 lakh and 9 lakh. How much will I get in total? 15 lakhs. From 15 lakhs, I'll first pay the external liability holders. 15 minus 3, what is the balance money left? 12 lakh. That is the worth of the business, net asset of the business, net worth of the business. This is what is money left for the owners at the end. Okay, not okay. Now, prepare consolidated balance sheet. So first, we will do consolidation. Before that, 4 working notes. Once that is done, then I'll make you understand, conceptually, what this consolidation means, what happened. When I do this initially, you might find that I'm doing things mechanically. Conceptually, you might have some doubts. So until I complete it and until I explain the concept, you should not ask any doubts. Once the normal question is completed, then I'll come back and explain the concept. Now, the first working note that we're supposed to prepare in the process, people, is called as AOP. So working note number 1. Working note number 1. Analysis of profit of S Limited. I forgot the format, people. Shit. You tell me. Particulars, percentage, pre-acquisition profit, post-acquisition profit, total. Total लिखेंगे क्या चाहता अपने? I am not able to understand what is pre-acquisition profit. The profit that the company earned before holding company acquired the shares. That is called as pre-acquisition profit. What is post-acquisition profit? After. After. मैं बोल रहा after. Right. After acquisition, the profit that you earned. So after you acquired the company, the profits that you made during the period is called as post-acquisition profit. Both the profits put together is called as total profit. This is the profit that will be reflecting as on 31st March 25. Okay, not okay. On, after doesn't matter. On, देखो, if I acquire the shares on 31st March evening last day, then 1st April only I'll start earning the profit, no post के लिए. Okay, now next, what am I supposed to do, people? You tell me. We have to take all the reserve and surplus. Boss, this is analysis of profit. When I say profit here, it means I'm talking about reserves and surplus. When I talk about reserve and surplus, I'm talking about all the reserve and surplus. Let it be general reserve, let it be workman compensation reserve, let it be security premium reserve, capital reserve, whether free reserve, non-free reserve, everything I'm taking into consideration. Now, all reserves and surplus. Now, when is the acquisition done, people? 31st March 25. This is the balance sheet as of 31st March 25. So today only we have acquired the company. Today only we have acquired the company. So this is the balance sheet of today. Today itself we are doing consolidation. Any problem? Any objection? There's a concept that I want to discuss. Hence I drafted this example. Today itself acquired. Today itself balance sheet is being prepared. Okay, not okay. Now I'll draw a timeline. 31st March 25 is the balance sheet date. On the same day, I am acquiring the share also. Yes or no? Now, on 31st March balance sheet, subsidiary company is having a profit of 4 lakh rupees. In this, how much is pre, how much is post? Very fast. 4 lakh pre. Others, Piyush was lightning fast. Others are still thinking, what happened with me? How much is pre, how much is post? Today I acquired share. Today I'm preparing consolidation. 4 lakh. I didn't even work hard in the business to earn the profit. Post acquisition profit to come, holding company has to participate in the business. No, I will do hard work, I'll sow the seed, then fruit will come. Today I acquired, today I'm doing consolidation. Where is the question of post acquisition profit? So the entire profit which is given in the balance sheet is pre acquisition profit. Madam, आज मैंने acquire किया है, पूरा pre है, post is zero. H limited में 6 lakh बताया. We are doing AOP of S limited. That's why 10 times I asked. We are doing AOP of which company? S limited. बस H का बात ही नहीं करना है. Now okay, not okay. हाँ, आएगा सब समझ में आएगा. 2 मिनट. Now total is how much, people? 4 lakh. 4 lakh. Post acquisition profit is zero. Post acquisition profit means what? From the date of acquisition to end of the year. What is date of acquisition? 31/3/25. End of the year, how much? 31/3/25. In the 0 day, how much profit can you make? Zero only. So the entire profit is pre-acquisition profit. Logic is clear or not clear? Do not by heart. Go with the data. So far in all the previous questions, you saw 4 lakh is total profit and you were searching for pre-profit in the additional information. Nothing is given. So if you know the concept, you will not get panicked. Otherwise, if you don't see a pre-acquisition profit here, you'll get panicked. So here, by-hearting is not important. Learning with concept is very, very important. Now, people, after this, I forgot the step. Oh, hedge limited, how much percentage? 80%. We call them as majority interest. Then others, how much percentage? 20%. We call them minority interest. I should ask question, right? Minority interest is also called as non-controlling interest. This term is mentioned where? Non-controlling interest, yes, in the Ind AS. Okay, not okay. Both means the same. Now, how much is the bifurcation? 4 lakh, 80%, 4 lakh, 20%. 320 and 80,000. 0, 0. Total ka bifurcation is not required. This is not going to go anywhere. Tell me, this is very difficult working note. Tell me. Online people, tell this is very, very difficult working note. Online people, tell no. Yes, no, something you say no. Hello, online people, are you all there?
Hello, sir.
Yes, sir.
Everybody, open your mouth, open your mouth. Working
Yes,
note
sir.
now is what? Calculation of cost of control. which is either goodwill or capital reserve. For me to calculate goodwill or capital reserve, I need three items. Two items. Are you sure? Shall I lock it? Yes. Which two items? Investment and net assets. Wonderful. Format, please. Particulars, workings, amount, inner column, amount, outer column. Please tell me, what is the total money that you have paid to acquire 80% shares in S Limited? 10 lakh rupees. Very good. Investment on the date of acquisition. In example, you write date of acquisition bracket income, not required. This is only for your knowledge. You will do it in all the question that you work out because I want to put that thing in your head. 10 lakh rupees. I paid 10 lakh rupees to get something. Now I'm eager to know that what have I got? How much have I got? What is the net asset I got? Less net asset. Sir, on which date are we supposed to calculate goodwill and CR? As on the balance sheet date, sir. Whatever balance sheet date is given, on that we'll calculate, sir. Tell. No, on date of acquisition. Very good. I want net asset on the date of acquisition. I want net asset on the date of acquisition because on the buying date, I want to know how much I spent. Did I spend extra or did I spend less? Once you buy it, once you buy anything, after that, you're not bothered. When you buy a property, that time you're very excited to know, have I paid a higher price to acquire the property or lower price or at par market price? So that excitement to know, have I paid more, less, that is there only on the date of acquisition. Once you buy it, once you have the property under your control, you're least bothered. So I want to know this on date of acquisition. On the date of acquisition, on the date of acquisition, I will pay money. I will pay money to the old shareholders of S Limited. He will bare minimum ask me how many amount. He will bare minimum ask me how many amount. Two amount. One, he will tell that this 80% shares I acquired by paying some money. That is capital. That I want. Second, this business was been running for several years. During that several years, I did the hard work. I sowed the seed. Now that seed is converted to tree and the tree is bearing fruits and that fruit is with the company. Company has not given that fruit so far. When will the company give the fruit in future? Who will get that fruit? X Limited. But that fruit belongs to whom? Old shareholder X in our previous example. So that you give me, that you give me. So he will ask two things. One is share capital. Second is profit. One is share capital. Second is pre-acquisition profit. One is share capital. Second is pre-acquisition profit. These are the two things that minimum he'll ask. What will he ask further? If he feels that the worth of the business is good, this company has generated sufficient goodwill to the extent of his share, he will ask goodwill also. So net asset plus goodwill. Now understand. The old shareholder will ask this much money. What is this breakup? Net asset plus goodwill. Net asset का two breakup. One is share capital. Second is pre-acquisition profit. Share capital is that money which actually the old shareholder has paid from his pocket. So this he will ask for sure. Pre-acquisition profit is the money which is resulting out of his hard work, which he does not have. Who has it? Company. So that money also he will ask. These two bare minimum he'll ask. Further, if the company has got generated sufficient brand value, reputation, good image, and with that brand image, if profits will be earned in future, since now X is going to sacrifice that profit, X is going to sacrifice the future profit. That future profit he may demand called as goodwill. So goodwill will come into picture whenever we talk about sacrification of profit. So X is going to sacrifice the profit in favor of holding company. So in future, holding company is going to get some profit, which is the result of the hard work of the old shareholder X. So that he will ask in advance. That he will ask in advance. So if the reputation is there, goodwill will come. If reputation is not there, goodwill will not come. Okay, not okay. So this is a subject matter of evaluation. But net asset is the bare minimum amount that Mr. X will ask. Net asset is the bare minimum amount that Mr. X will ask. So net asset is comprising of two components. One is share capital. Now share capital on what date? Date of acquisition. What is the total share capital of the subsidiary company? Total share capital of subsidiary company. 8 lakh. Sir, full 8 lakh will record, sir. No, we have taken 80% of the shares from X. So into 80%, how much it is? 6,40,000 is the capital amount X is contribute to the company. So that he wants from holding company. Plus X is saying that apart from this capital, what I gave to the company, that you gave me. But during this period, I made the profit also. That profit also I wanted. So this is called as pre-acquisition profit, which is nothing but reserve and surplus. This you don't have to calculate it. We have already calculated this in AOP. So I want pre-acquisition profit of H Limited, because this is the money that will go to H Limited, which H has to pay to X. So 320 you will take it. Any problem from here? Both put together, what is the total worth of the company? 9 lakh
9 lakh
60,000.
60,000.
Which means 9 lakh 60,000 is the worth of the company. Whatever is the company's worth into 80% of that is the 960. 9 lakh 60,000 is 80% of the worth of the company. You purchased goods worth 960, but you paid how much? 10 lakh. You paid extra. How much you paid extra? 40,000 extra you paid. So which means the goodwill here is how much? 40,000. Is it the total goodwill of S Limited, or is it to the extent of 80% of X's share? 80%. So this is 80% of the, to the extent of X's share, this is the proportionate goodwill. So if I want to know what is the total goodwill of the entire business, what will I do? 40,000 divided by 80% you do. You'll get the total goodwill of the entire business. Okay, not okay? This is goodwill. This is goodwill. Tell me, people, this is very difficult. Tell me. No, not at all difficult. Then why people say consolidation very tough? Masala aana baki hai. So after masala also, if I make your life easy, then what will you say? Oh my God, this is the answer I expected. Now, third working note. Third working note. Jupi working note. I don't have to teach. You will tell the answer yourself. You have to tell me what is the total minority interest value. Wait. Working note 3 heading. Working note 3. Calculation of minority interest. Means what? What is the total money that is belonging to minority interest? Now the question that comes is, why are we calculating this? Second question that will come to your mind is, where will this come into the balance sheet? I will say it will come on the liability side. You will ask why it is coming on liability side. For that I should give conceptual explanation. Until that you will wait. Okay, not okay. So what question you are about to ask? That question I ask myself and I'm asking you to wait. Now, what is the total money that we owe to minority? What is the total money that we owe to minority? I'm asking total money that we owe to minority. Sir, for minority, we got share capital, sir. Because minority people took 20% shares in the company. So they paid me share capital. S Limited. I'm S Limited. S Limited got 20% of the share capital from minority. So this I have to repay back to them. Yes or no? Yes or no? Okay. Profit. Company has earned the profit out of the hard work of minority interest. Minority people have worked hard to the extent of 20% in the business. Profit belongs to them. The profit is bifurcated into two categories. One is pre, one is post. So one, I'll give share capital to minority. Second, I'll give them pre-acquisition profit. And third, I'll give them post-acquisition profit. These three put together is my total commitment or liability that I owe towards the minority interest. Any difficulty? This is your working note. Particulars, working amount. Net asset of minority interest on the date of acquisition. On the date of acquisition is actually these both. If I ask total of minority interest, then post acquisition profit also should be added. Okay, not okay. Again, I'll discuss this somewhat after some more time. Write the format, people. Particulars. वर्किंग अमाउंट, उसको कुछ नहीं मालूम है, लक्षिता वो भी सीखने आई है, उसको कुछ नहीं मालूम है. हाँ हाँ.
What the company owes is share capital plus reserve and surplus, and what is total is we have to add post service.
करेक्ट. बट अभी वो मैंने कंप्लीट नहीं किया, उसमें थोड़ा मसाला है. वेट एंड टेल. वो बोल दिया आउट ऑफ एक्साइटमेंट. आई फॉरगॉट, आई टेक इट बैक. नाउ I want to know what is the total money that I owe to minority. I owe them share capital. If I close the business today, what will I repay back? Share capital I repay back. How much? 8 lakh is the total share capital into 20% of that. How much it is? 1,60,000 I have to repay back. Okay. If I close the business today, if I just pay share capital, will they be fine with it? No, they'll ask profit. How many profits they'll ask? Two profit. One is pre, one is post. In this question, there's no post profit because today acquisition done, today is the balance sheet date, today is consolidation. So post will not come. Post is zero here. What is pre now? Pre, sir, don't need to calculate. It is already calculated. Pre-acquisition profit of minority is how much? 80,000. From AOPL, we can choose the data. Reserve and surplus pre-acquisition profit coming from AOP. How much it is? 80,000. If I total this, this is called as minority interest as on date of acquisition. Any problem? This is minority interest as on the date of acquisition. Share capital is as on date of acquisition, and this is profit as on date of acquisition. Both put together, how much people? 2 lakh 40,000. With that, if I add reserve and surplus, which is post acquisition profit, which in this case is zero because after acquisition we did not do any business, so I don't have any profits. I'm yet to do the business. This 2,40,000 is called as total minority interest. This is total minority interest. Generally, this is after acquisition. Okay, not okay. How many working notes done? 3 working notes done. I'll do fourth one now. Logic of third and fourth I have not explained. After I do this working note, all the 4 working note, after I prepare the consolidated balance sheet, then I'll come back to the same question and do the conceptual discussion. We'll discuss conceptually. Working note 3, any problem? Can I go to working note 4? Working note number 4. Calculation of consolidated reserve and surplus. Consolidated reserve and surplus. Format for that. Particulars, amount. My question to all of you, this format what I'm giving no, for AOP, goodwill, minority or consolidation, is this subject to change? Is this subject to change? Can this change? Yes, if masala comes in, this will automatically get upgraded. Few things might be added, few things will be subtracted. All that masala will come in future. Today I'm keeping the concept very, very simple. Guys, we have to prepare what is the consolidated reserve and surplus. What do you understand by the term consolidated reserve and surplus? A reserve and surplus which is consolidated means holding car reserve and surplus plus S limited. Both the reserve and surplus should be consolidated. Okay, not okay. So here what we'll record first is always holding companies reserve and surplus as on that balance sheet date. Whenever you're preparing the consolidation, whenever you're doing consolidation, as on that date, what is the reserve and surplus of H limited? That I will take it. Any problem? H limited's reserve and surplus as on 31/3/25. 6 lakh rupees given in the balance sheet. Sir, where, sir? This is balance sheet of H limited and reserve and surplus of H limited is 6 lakh rupees. Any problem? Now tell me people, with this, should I add something or not? I have to add subsidiary ka profit. Subsidiary ka profit that belongs to whom? H limited. Usko nahi. This is consolidated ka reserve and surplus. Means what? Consolidation is done by whom? Holding company. Consolidation is done by holding company. So holding company wants to say that this is my profit, this is my profit. So holding company says that this 6 lakh is my profit. My profit is my profit. None of your profit. You know this dialogue is coming from where? No. This reserve and surplus is my reserve and surplus. None of your reserve and surplus. My business is my business. None of your business. Whose dialogue? Hey, Bhagwan. Paji, याद नहीं आ रहा है सलमान खान रेस Oh my God.
Personally, नहीं है.
See, 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 see. No, 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 no. After this. Now, H Limited wants to know total profit of H Limited. So 6 lakh is his profit. Nobody is going to question on this 6 lakh rupees. I want to know how much of subsidiary's profit I should add here. Subsidiary ka profit is my profit. It doesn't belong to anybody. So what profit is that? Okay, Lakshita says, old Lakshita says after acquisition. What is new Lakshita says?
Post.
Wow, okay, better words. Post. 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 Lovely. That's the answer. Now please understand, we have done analysis of profit. Whose profit? Whose profit? Subsidiary ka profit. Now understand this very carefully. Pre-acquisition profit 320. Does it belong to us? Is it my profit? Whose profit this is? Old shareholder. So this is his profit. It is not my profit. Can I claim this is my profit? No. This 80,000 whose profit? Minority ka profit. This zero whose profit? Minority ka profit. Then what is there for me? Only this profit. So this is the post-acquisition profit. Means after acquiring S Limited, H Limited would have worked hard, no? During the post-acquisition period. After acquisition, H Limited did the hard work. During that period, what did you earn? That is your profit. So post-acquisition profit. This one is there, no? This I'll record in my consolidated reserve and surplus. Any problem? Is the logic clear? People by heart. Don't by heart. I am telling you that this 320 is what? Profit of S Limited before acquisition. This belongs to whom? X. This profit 80,000 belongs to minority. This belongs to minority. This belongs to holding company. I'm preparing consolidation. Who's preparing? Holding company. So holding company wants to know what is my total profit. 6 lakhs, his own profit, his profit. Plus subsidiary ka profit, what he has earned after acquisition. This is what I will take into consideration, which is zero in our example. So add post acquisition profit to the extent of 80%. This is coming from where? AOP. In our example, it is zero. Total how much? 6 lakh rupees. Any difficulty? Loudly say yes or no. Everybody, Dhanush. Bye. Piyush. I'll ask one more time. No. Chorus mein again. Clear, not clear? Very good. 4 working notes done. All the 4 working notes done. Now we'll prepare the consolidated balance sheet. Are you all ready? Now, heading. Consolidated balance sheet as on 31/25. 1 second. You didn't remind me today. Very good. Tell me, people, this balance sheet ka format is coming from where? Schedule 3. Schedule 3. But in this format, there's a small twist that has been done by AS21. One thing got added. Rest all is the same. That one thing which got added, who added that? AS21. Particulars. Note number 31st March 25. There's no comparative, so leave it. Understand, you may not get a standalone Schedule 3 question in exam. They might infuse Schedule 3 where? In consolidation and ask you. Got it, not got it. But without knowing Schedule 3, you can't perform this well. So Schedule 3 should be in your fingertips. Tell me, people, what is the main heading? Equity and liabilities. Under that, shareholders' funds. Under that, share capital. Under that, reserve and surplus. If I don't concentrate on the Schedule 3 format for this question, And if I focus on the main core concept, is that okay with all of you? No, sir. हाँ बोलना था, हाँ बोलना था, हाँ
नहीं मेरे को लगा फॉर्मेट ऊपर नीचे हो गया
हाँ. Now, share capital, I told you, when you prepare consolidated balance sheet, only share capital of holding company will come. Share capital of S Limited will not come. Why? Because it is knocked off against investment. So what is share capital of holding company? 10 lakh rupees. Concept I'll explain. Don't panic. 10 lakh plus 0. 10 lakh. Reserve and surplus. Don't apply your brain. Already working note over. Working note number 4. How much is your reserve and surplus? Total 6 lakh rupees. Oh my god. Second is, sorry, this is where you are failing. Now, AS21 says that the next item that you're supposed to show is minority interest. Minority interest. Now you will have a doubt here, sir. Why minority interest is coming inside the balance sheet? I knew it. And I asked you to keep silent till the concept is explained. Now just copy paste. I will be done with the consolidation. Then I'll come back and I'll do postmortem for each and every item one by one. Minority interest, no more question. Working note number 3. Copy paste minority interest as it is. How much it is? 240. Will I give explanation or not for this? नहीं दिया भाई. Explanation. Conceptual explanation will I give or not? Yes. In my class, no concept, no class. If somebody asks you about what is minority interest doing here, you should be in position to answer. That is important. Correct? No. But there's a lot more to it. Minority is the main heading. Like shareholders funds, current liability, non-current liability, minority interest is a separate item. वो आ गया तो भी घुसा देना बीच में. Now,
उसको 3 करेंगे शेयर कैपिटल के बाद माइनॉरिटी
नहीं पूछेंगे, छोड़ दे. Now Piyush is asking, sir, if they ask share application pending allotment, what to do? Make that 2 and make minority interest 3. This is by AS21, it's not by schedule 3. कर सकता है बोल तो रहा हूं मैं तेरे को. Now next is what? Current liability. Non-current is not there. Current liability. Simple. My current liability is my current liability. Their current liability also my current liability. So 5 plus 3 is how much? 8 lakh. Oh. Total please.
26 lakh
26 lakh 40,000. Okay, this is total liability. Next, 2 assets. Assets we have PP and current assets. So non-current asset and current assets. In that first one, non-current asset. Under the first one, PPE. My PP is my PP. Their PP also is my PP. Note डालना पड़ेगा, but I'm not focusing on the note. My focus is to make you understand the consolidated balance sheet. The proper format, yes, for everything you have to do notes. Everything. Patience, everything I'll explain. Shanti, thamba.
11 lakhs
5 plus 6, how much? 5 lakh plus 6 lakhs. 11 lakhs. Sorry? I'm coming. Next.
वो intangible assets है ना
Babu. Oh, here. It is tangible and intangible asset under the PPE. मैंने क्या किया सारे डायरेक्ट पीपी लिखा. I'm telling you, I'm not concentrating on the format. I want to focus on the concept. Next is intangible asset. Goodwill. Directly 40,000. This is coming from working note number 2, which means each working note is going to give you some data to be incorporated in the balance sheet. One we already included in 2, 3, 4. Some part of 1 is gone into some in 3, some in 4. So one AOP will not go anywhere directly in the balance sheet. It will go through 2, 3, and 4. Okay, not okay. Second one, current asset. How much? So my current asset is my current asset. Their current also is my current asset. 6 lakh plus 9 lakh. 15 lakhs. Total how much? 26 lakh 40,000. This is consolidation, people. Balance sheet tallied. Very easy. Until masala comes in, very easy. Yes, you're right. So this entire game is about how to calculate this, this, and this. These three are subject to working notes, conceptual understanding. Whereas all the other items are just adding the items together. That's all. Yes. Now the question that comes is, what is this all about? Now, can I go to the concept? Tell me one thing, people. What is a journal entry? Again, through journal entry, I want to explain. If I want to bring all the assets and liabilities of S Limited in my books of accounts, including capital, everything, what will be the combined journal entry? Current asset account debit, PPE account debit. How much it is? 9 lakh and 6 lakh. Okay. 9 lakh worth of current asset, 6 lakh worth of PPE, to current liability, 3 lakh. To current liability, 3 lakh. To reserve and surplus, who will take? 4 lakh. Until last class, I didn't put reserve and surplus. Every class, the level of your challenges will go up. Now reserve and surplus is coming. That also will take it. No. Will you say, no, no, reserve and surplus, you don't come with me. You stay there itself. I don't like you. Only capital you come. Will you say like that? Poor fellow, reserve and surplus. Take him also, no. Your friend only, no. What Lakshidam? Reserve and surplus भी आएगा साथ में. समझा? 4 lakh. Oh my God. I'm so sorry. Share capital how much? 8 lakhs. To share capital, 8 lakhs. Any problem? After this journal entry, can you please tell me how does my balance sheet look like after this journal entry? After this journal entry, how does my balance sheet look like? Wait. I'll do old format. Huh? That is easy to understand. Share capital of H Limited, how much? Can somebody take a photo of this and keep no with you? हाँ तो फिर भी if I ask you, can tell me instantly. Done? Okay. Tell me capital of H Limited. Or can I do one thing? HS total. Particulars. HS total. Wow. Oh my God. People are impressed by this diagram. Oh, you got impressed because of the signature? Power of, oh my God. Now, tell the share capital of H. 10 lakh. S, 8 lakh. Total, 18 lakh. This is how my capital looks after this journal entry. Do we really pass the journal entry? Do we really pass the journal entry? In exam, you're not required to do. In real life, it depends. Generally, maximum people, what they do is they prepare consolidated balance sheet on the Excel sheet. They feel more comfortable in Excel sheet. So we'll take notes to accounts of H Limited, NS Limited. From notes, directly we'll start giving link and prepare the consolidated balance sheet. Got it? Some people who are quite rich, they can afford software. So what they will do is they'll import this Excel sheet in the software. It's a customized software, and that software will by default prepare the consolidated balance sheet. Anything is doable. Correct? If you know coding, how to create AI, etc., you can prepare anything on this world. So you can generate this consolidated balance sheet through Excel or through software. Okay. So journal entry may be passed, may not be passed. There's no hard and fast rule that we should not pass. In IC examination, will not pass. In real life, some people pass, some people don't pass. Got it, not got it. But for conceptual discussion, I'm doing journal entry here. Will you pass this in the exam and come? Will IC ask? No. The moment I put share capital 8 lakh in credit here, this 8 lakh will come here and the total share capital now becomes 18 lakh. Reserve and surplus of holding companies, how much, people? 6 lakh. How much is coming from subsidiary company? 4 lakh is coming. The moment you put R and S in credit, it comes here and total becomes 10 lakh. Current liability of, can I leave one line gap in between for convenience? One second, one second. This luxury only I have. Now, current liability of H Limited, 5 lakh, and S Limited, 3 lakh. The total current liability reflecting is 8 lakhs. Coming here, PP of H Limited is how much? 5 lakh. S Limited, 6 lakh. Total how much? 11 lakhs. Current asset of H Limited, 6 lakh, 9 lakh, 15 lakhs. Investment is there. Investment is there in H Limited. How much? 10 lakh. Nothing in S. Total how much? 10 lakhs. Now tell me balance sheet matching, not matching. Matching, not matching. It has to match. What did we do? We just combined the data. We did addition only. How will it not match? Wrong, Kefil. Now, in this balance sheet, you should have a fundamental problem. What is the fundamental problem? Now, before that, when I say my investment is 10 lakh rupees, when I say investment is 10 lakh rupees, what does it mean? This investment is to the extent of 80%. What does this represent? This represents that 80% of the net asset of 80% of net asset of subsidiary company is mine. For acquiring that, I paid how much? 10 lakh. Can I show before consolidation? Can I show subsidiary ka net asset in my book? No, because that belongs to whom? Subsidiary company. So subsidiary company will show their asset and liability in their book. I can't show that in my book. So in my book, what can I show? To acquire them, what did I pay? That only I can show. Got it, not got it. So before consolidation, since I cannot show subsidiary ka 80% asset in my asset, I showed that in form of investment. Now consolidation is giving me a right. Then now I can show their asset in my books of accounts, which I did. I'm showing their asset in my book now. In that case, do I still need investment in my books? No. So investment I'll knock off. So investment is getting knocked off means investment is going out. I'm knocking this off against share capital. Got it, not got it. This share capital, I'm knocking it off. Okay, not okay. If you don't understand, no problem. With journal entry, I'll give more clarity. Thank you. Investment in my books, holding company's book represents the net asset. How much of the benefit I own in the other company, in the subsidiary company. This is what investment reflects. Now, what does this 8 lakh mean in my books of accounts? This 8 lakh means that S has to pay this money to H. Before consolidation, S was separate, H was separate. No marriage. Both went to individual party. In consolidation means marriage. शादी में तिलक कौन लगाता है माई? इतना एक्सपीरियंस ही है मेरे को भी. S will एक ही बार हुआ ना, इतना ही एक्सपीरियंस. Now S has to pay to H. This is before consolidation. After consolidation, after marriage, S has to pay to H. Will we really pay? No. So this liability, though was a real liability before consolidation, but after consolidation, this liability has become dummy liability. So will I show dummy liability in my books of accounts? No. This 10 lakh rupees, who has to pay to whom? S to H, H to S. Correct. So basically, I paid this money. This is already paid to whom? S Limited. H has already paid this money to S. From S, we have to receive this. We have paid this already to S, and this is what we have to receive. Before consolidation, both were separate. So in one book it was asset, another book it was liability. So subsidiary has to pay to holding company. Holding company has to receive from subsidiary. So pockets were separate. Now after consolidation, both have come in one single place. Both the pocket has become my pocket. So this share capital should be knocked off against this investment. Okay, not okay. Because it is as good as telling this 8 lakh rupees I have to pay to my own self. This 10 lakh rupees I have to receive from my own self. Because both have now become my company. So I have to receive and pay to my own self. So showing both in one place is not nice. So we eliminate contra transactions. We eliminate contra transaction. Got it, not got it. Now this process is not going to be that easy. This process here now it's going to be a little bit challenging. Why? Because now the share capital comprises of two elements. One, holding company ka part which is 80%. Second is minority ka part which is 20%. So now I will reverse share capital. I will reverse these both. This both I will reverse. Separately 80% for holding company and separately for subsidiary, sorry, minority people, others. Now this share capital and reserve and surplus should no longer be there in my holding company. To create it, I gave a credit. Now to cancel it, what will I do? I'll give a debit. Look here. Here is where the journal entry has been passed. So this is the journal entry for bringing in all the assets, all the liability, share capital, profit inside the holding company. Now what are we doing? Eliminating them by giving a debit. So share capital account debit. Reserve and surplus account debit. Both the net assets has to be eliminated to the extent of 80%. So 8 lakh ka 80% is how much? 6 lakh 40,000. 4 lakh ka 80%. How much it is? 3 lakh 20,000. These both put together is how much? 9 lakh 60,000. This I'm knocking off against investment. This is liability that I have to pay. I have to pay whom? My own self. Investment is money that I have to receive from my own self. So the money that I have to pay to my own self, the money that I have to receive from my own self, both I am knocking off against each other. Both I am knocking off against each other. So to investment. Now I have to remove this investment also. I need to remove this investment also. Investment is on asset side. Asset has got what balance? Debit balance. To create asset, debit. To close asset, credit. So to investment, 10 lakh rupees. Difference is that it's not coming equal. The total is not equal. The difference is what? 40,000. What will come into picture? Goodwill will come into picture. Goodwill will come into picture. So goodwill account debit. How much? 40,000 rupees. This is the balancing figure. This is what we did in working note number 2. Calculation of goodwill and capital reserve. Working note number 2. So goodwill is a new account coming into picture. So far, is goodwill there in the balance sheet? No. Now in the journal entry of debited goodwill. So goodwill is having a balance. Which balance? Debit balance. So now goodwill will come into the picture. Okay, not okay. Now can I give the impact of this journal entry in the balance sheet? Yes. Share capital created 8 lakh, added 8 lakh. I'm reversing how much? 640. So can I come back here and say minus or minus cancellation against investment? How much am I cancelling? 6 lakh 40 is cancelled against investment. Got it? Not got it. Next, I debited 320. Reserve and surplus is liability. Liability is credit balance. To increase liability, credit. To decrease liability, debit. So debit here means minus. Debit here means minus. This I will minus. So minus, this is minus against the investment. All of this is minus against investment. So minus cancellation against investment. How much it is? 3 lakh 20,000 rupees. Any difficulty? Online people, any difficulty?
No, sir.
No,
Goodwill
sir.
have debited. So new account is coming into picture. So goodwill will come into picture. How much? 40,000. 40,000 directly. Investment you have credited. Investment credited. Plus or minus? Minus. So minus cancellation against net asset and goodwill. The total amount that you pay is sum total of net asset plus goodwill. Net asset plus goodwill is the purchase consideration. So this 10 lakh rupees I'm cancelling against net asset and goodwill. So minus 10 lakh. Balance is now 0. Are you able to understand the impact? I'm doing line by line impact. When I did the consolidated balance sheet, you never got to know what happened internally one by one. Now I'm doing post-mortem of each and every item. How share capital became 3 lakh. Sorry, how share capital became 10 lakh. Here, very conveniently we wrote 10 lakh. You didn't even get to know how it became 10 lakh. Why it became 10 lakh. So now I'm explaining the process how this became 10 lakh. How initially that full capital came, then how the capital got reduced, then how it became 10 lakh. So in between whatever masala happened, all that masala I'm trying to explain one by one. Nobody will explain all this. Directly people will do this working note and format game over. And your job also would have done with this. No need to know all this concept. But why I'm teaching this concept is because tomorrow if somebody asks you any question, you should be in position to justify what is happening. At the end of the day, how much important is your CA degree? Equal important is your knowledge. If both are there, growth will come automatically. If this is clear, can I go forward? Online people, if this is clear, can I go forward?
Yes, sir.
Now,
Yes, sir.
have I cancelled the entire capital in reserve and surplus? No. I've cancelled the capital to the extent of only 80%. How much is spending? 20%. Guys, whenever I'm asking question, open your mouth and respond. Or else what will happen? You'll go in sleep zone. Even if I'm sitting on the other side, no. If we listen to something for a constant period and there is no movement in my body, brain, nothing, what happens? No, automatically our brain goes in sleep mode. So to keep it active, what is more important? Participate. The more you talk, no, when you talk, there's a vibration in the whole body. That vibration will not allow you to sleep. So please participate. Yes, 80% of capital is knocked off. Now remaining 20% has to be knocked off. Share capital account debit. Reserve and surplus account debit. How much? 8 lakh into 20 percentage. 8 lakh into 20 percentage. 4 lakh into 20 percentage. 1 lakh 60,000 and 80,000. 240. 2 what? Minority interest. How much? 2,40,000 rupees. So can somebody explain me why this entry we have passed? I will to tell. I will to tell. You tell me what did you understand by this entry? Why it got created?
80% here, but 20% to we owe that minority interest.
But why do you owe it? Why do you owe it? That subsidy company will own. Okay. You guys are very near, but you're not answering what I am expecting. You were saying something. Same only. Okay.
As a holding company, direct balance sheet, so it has to show each entity of subsidiary company also.
That we are showing anyways, current liability we are showing. No, why are we showing in form of minority? Okay. Do we have minority interest like a liability in the subsidiary company? Oh. Lakshita said, whatever is the liability of the old company, the subsidiary company, we show here. In the books of subsidiary limited, minority interest liability is reflecting there. Okay. Now, a little bit more polished way. I'll tell. Whatever is the net asset of subsidiary company, what belongs to us? Only 80% of that. But look at our audacity. We took the entire 100% net asset and recorded. Now look at this. What is the asset of PP of S Limited? 6 lakh. This entire 6 lakh of PP, does it belong to holding company? No. 80% of 6 lakh belongs to us. How much it is? 4,80,000 only belongs to us. 4,80,000 only belongs to us. What is this 480? 6 lakh 80%. 6 lakh is PP of subsidiary. How much right we have over that? Only to the extent of 80%. I am owner in that company only for 80%. So I have 80% right only on the 6 lakh rupees. But look at my audacity. I'm recording 100% asset in my book. So when I'm recording 100% asset in my book, 20% liability I have to show, no? Though I'm recording 100% here, that full 100 is not mine. 20% of this I have to pay separately to minority, that I have to show, no? Because AS21 have given the power to consolidate. The power of consolidation is given to whom? Holding company. Because we are holding company. So we have the power to consolidate. And when we consolidate, we don't consolidate only to the extent of 80%. Just because we are the owner of 80%, we don't prepare consolidation for 80% because that will not give true picture. So AS21 says that you do full consolidation. Though you have 80% share, you do full consolidation. In this process, somebody else's asset, you're telling it is your asset in consolidation. So to prove that is wrong, you create a liability in that name of minority. So the person who's reading will understand, Aksha, this is the total asset of both the companies put together. In that, 80% belongs to holding, 20% will belong to minority. Like that, it will be easy to understand. So on the asset side, I'm recording 100% asset. I'm recording net asset of 100%, which 80% belongs to me in form of share capital plus reserve and surplus. And 20% belongs in form of minority interest liability. Okay, not okay. One more time. एक second. This is total asset, 100%. This is non-current asset plus current asset, which is 100%. These both, if I net off, I will get what? No, not zero. 100 ka don't take little 100. This will be more, this will be less always. Current as total asset, this is total asset. From total asset, if I minus external liability, I'll get net asset. So can I say this is net asset? 100% means what I meant by 100% is this is like both combiningly put together. Okay, not okay. Now, net asset 100% is how much? Some value. This net asset, does it fully belong to me? No. Only 80% belongs to holding company. 20% belongs to whom? Minority interest. This is what? Net asset of holding company plus subsidiary company. 100% of asset belongs to holding company and 80% of asset belongs to holding company of subsidiary company. This is what net asset of holding subsidiary both put together. Holding company ka all asset is 100% belonging to holding company. But subsidiary company ka asset, net asset, only 80% belongs to me. So that 80% liability I'm showing. Any problem? And remaining 20% belongs to whom? Minority interest. Got it, not got it. So here we have net asset of 100%. Of that, 80% belongs to holding company, 20% belongs to minority interest. Okay, not okay. Online people, okay, not okay. Non-current liability, sorry, not. Sorry. This is non-current liability plus current liability. So basically nothing but from total asset, if I minus external liability, I'll get net asset. So I'm putting net asset here. Do you have any objection? From total asset, if I minus external liability, I'll get net asset. Net asset is debit balance. It comes on asset side. Does this entire net asset belong to me? This net asset is asset of holding company and subsidiary company. Does this 100% belong to holding company? No. In that, 80% of subsidiary asset belongs to me and 20% of subsidiary asset belongs to somebody else. So that we are showing in our book as liability. Because that asset, we dare to show the entire asset in my book. We did a daring to show the entire asset in my book. 20% is not my asset. Still, I'm showing it as my asset. To cancel the impact of that asset, we have to create a liability in form of minority interest. That is how minority interest is coming inside the balance sheet. So many people on the planet do not know why minority interest is coming inside the balance sheet on the liability side. This is very important. Clear or not clear? Yeah. Online people, clear or not clear?
Yes, sir.
Now, share capital I'm further reducing. Yes, ma'am. Now the question what Sakshi is asking is, why are we showing full 100% of subsidiary net asset in my book? Why can't we show only 80%? Why? Because I'm the owner of the holding company. Plus my holding company has got major share in subsidiary company. So I want to know what is my total asset of the company. I don't want just my share of part. I want to know because minority also is a part of my company only. No? So on the whole, I want to know complete picture. Why are we doing consolidation? I have some asset. Anita ma'am has got some asset. My brother will have some asset. My father will have some asset. My mother will have some asset. Individually, their own asset. Okay. But to get a good feeling, we also want to know totally how much is the asset. Totally how much is the asset. In that, what belongs to me and what belongs to other people. So that gives you different kick. When you say individually 1 lakh in bank, okay. Everybody put together 10 lakh in bank means it gives a good feeling. So consolidation is giving a good feeling to you. Oh, this is my total asset. This is my total liability. Like that, you get a good feeling. Got it, not got it. Now, since, see, AS21 very clearly said that just because you are having 80% stake in the company doesn't mean that you do consolidation only for 80%. Because if I show only 80% of the asset, if I show 80% of subsidiary asset in my book, remaining 20% where will you show? Because minority are not asked to do consolidation. And if I show only 80% in my book, some asset if I don't show in my book, as a owner, as a group, as a data group, I will not know what is my all assets put together. So I want to know, as a Tata Group, as a Reliance Group, what is my total asset in the business? Does everything belong to me? No, 80% belong to me, 20% other people. So what belongs to other people? I'll show as liability. What is wrong? By this way, I'm showing all the asset also. And what does not belongs to me, I show in form of liability also. From total asset, if I minus minority, I'll get my part, which is 80%. No, those who know the concept, they will look at the balance sheet, they'll understand everything. No need to explain anybody. I'm explaining you now. Will you forget this ever in life? You take the consolidated balance sheet of any company. When you find so much share capital, so much reserve and surplus, so much minority interest, you'll understand, no. Acha, share capital, reserve and surplus is 80%. This is 20%. Automatically understand. I'm ignoring your holding company ka part. I'm only focusing on subsidiary ka part. So when you know the concept, when you read the balance sheet, automatically you'll know. Explanation is to be given to whom? Who does not know what is consolidation. And we can't keep on giving explanation. No. I'll be accounts teacher, teach everybody in the world. So if any investor is investing in the company who's coming from science background, he does not know consolidation, ask him to go to Prathik sir's class and learn it. You as a CA of that company, can you sit and teach them? Tomorrow you become CA, you do consolidation of any company, will you sit and teach them? Or will you say, go to Prathik sir? That's all. You do your job, I'll do my job. So if anybody's got any problem in teaching, don't panic, send it to me. I'll take care of it. Solma. Correct only, no. Ipo 6 lakh is the total asset PP of subsidiary company. Actually, how much of this asset belongs to me? 80%, which is 480. But what am I doing? I'm showing full 6 lakh. If you look at the consolidated balance sheet that we prepared here, in PP, what did I show? Full 6 lakh, 11 lakh I've showed. Is this entire 11 lakh my asset? In that 6 lakh, 480 is only my asset. But I'm showing full. What is 6 lakh at 20%? 120. I'm showing 120, somebody else's asset also is my asset. So on the part, I have to show as liability. To cancel this asset, I'll put a minority interest here. 120. So though I showed full asset here, but on the other hand, I'm telling that no, this in this one part I have to pay to the minority. So I created liability. So I'm showing full asset also, 100%. Either 20% I'm showing as what? Minority liability. So remaining 80% is what? Of the holding company. This is 100% of subsidiary asset. In the 20% belongs to minority. Our balance 80% belongs to me. H Limited. Now clear? Okay. करना ऊपर? Okay. Now, guys, we gave the impact of second journal entry, but third journal entry impact not given. Share capital debit means minus. So minus transfer, cancellation of this and transfer to minority interest. Transfer to minority interest. Any problem? How much? 1,60,000. So 640 plus 160 is equal to how much? 8 lakhs. So if I minus it, please tell me what is the balance share capital now? 10 lakhs. So this will become 0. This will become 0. So 10 lakh plus 0 is how much? 10 lakhs. Any problem? And this 160 you transfer where? To minority interest. To minority interest, what is coming? 1,60,000 is coming so far. Any problem? No problem? Okay. Next, what is happening? I'm transferring reserve and surplus. In reserve and surplus, I'm moving how much? Sorry, did I tell any wrong value? Oh, I took this. This I removed, then this I have to remove. How much? 80,000. So minus transfer to minority interest. How much? 80,000. This will get added here. 80,000. So how much is total? 2,40,000 here. And 4 lakh minus 320 minus 80 is how much? Minus 80, how much? 0. So now this 320 is cancelled against investment. This 320 reserve and surplus, what I got is cancelled against my investment. So whatever I paid that I've got. Why here 0? Because there is no post-acquisition profit. So pre means what? Whatever is the pre-acquisition profit of the subsidiary company, it is not belonging to me. This 320 is belonging to X. So while paying the investment money to X, in that 320 is gone. And this 80,000 is minority. This 4 lakh is what? Total pre-acquisition profit. In the upcoming question, here we'll have 5 lakh, including post-acquisition profit. So in that case, here if 5 lakh is there, then 1 lakh is my post-acquisition profit in my reserve and surplus. Got it? Not got it? In this question, whatever is the profit is the pre-acquisition profit. Why? Because the acquisition is happening on the same day of balance sheet. What is the balance sheet date? Same day we did acquisition. So there is no post-acquisition profit. So I'm just telling, instead of 4 lakh here, if there is 5 lakh, 1 lakh extra because of post-acquisition profit, then how much will be the balance here? 1 lakh will come after adjusting. Got it? Not got it. But here there's no post-acquisition profit. So my entire reserve and surplus of subsidiary became 0. Okay, not okay. So what is my profit left over now? Subsidiary ka, it became 0. If I do a total of, once again, if I do total of this, it become 0. So 6 plus 0 is how much? 6 lakh rupees. So is it matching with our answer or not? Inge ma, Inge. 10 lakh is the share capital, 6 lakh is reserve and surplus. This 6 lakh reserve and surplus, as of now, it is purely the reserve and surplus of holding company. If there is any post-acquisition profit, that will get added here. Okay, not okay. In this question, no post-profit, so it did not get added. Minority ka 240. Minority ka 240 came here. Any problem? Minority 240 came here. And current liability 8 lakh. In this entire process, we are not touching current liability. We are not removing current liability because we are incorporating current liability in my books. Okay, not okay. Now, look at this. वो minority में चला जाएगा. हाँ, that working note में चला गया ना. I'll come back. Again, next question is based on that only. Now, guys, I've passed 3 entries. Let's do a combined entry of 1, 2, 3. If I combine 1, 2, 3, what will happen? If I combine 1, 2, 3, what will happen? Once again, I'll just erase all of these things. Share capital 8 lakh credit is knocked off against share capital debit 640 and 160. 640 and 160 is 8 lakh or not? Share capital knocked off. Reserve and surplus 4 lakh knocked off against 320 and 80. Got it, not got it? Investment in credit here, iska debit is there where? In the holding company ka book already. In holding company, 10 lakh already is there in debit. I gave a credit to cancel it because this journal entry is being passed by whom? H Limited. So 10 lakh investment is already there in the investment ledger. That I'm giving a credit and knocking off. So this also will go off. Yes or no? If I ultimately combine, what am I left with? Current asset plus PPE minus current liability. All these 3 put together. Can I call this as net current asset? 9 plus 6 minus 3 is how much? 12 lakh. So if I put here net current asset account debit, how much it is? 12 lakh. Do you have any problem? How much have you paid to acquire it? For a second, I'm just carrying forward investment here. To investment, how much it is? For a second, I'm just carrying forward. I'm not cancelling investment as of now. Let's carry forward. To investment, how much? 10 lakh. To minority interest is how much? 2 lakh 40,000. Goodwill is how much? 40,000. Answer matching, not matching. Matching, not matching. Now, this 12 lakh is net current asset. Current asset, total asset minus external liability, I got 12 lakh. 12 lakh worth of net asset. Does this entire 12 lakh belong to me?
No.
How much belongs to me?
80.
Only 80%. 12 lakh 80% is how much? 9 lakh 60,000 ka net asset belong to me. But how much did I pay? I paid 10 lakhs. How much did I pay extra? 40,000. Got it, not got it. That 40,000 is goodwill. That 40,000 is goodwill. Now, I showed investment in my balance sheet here. I showed investment at 10 lakh because I did not have the right to show their asset in my book, their liability in my book. Before consolidation, I didn't have the right to show their asset in my book, their liability in my book. So I showed it in form of investment. Now that after consolidation, I've shown their asset in my book, their liability in my book. Is there a need of investment? No. So investment will get knocked off. Investment will get knocked off. Which means what? Investment is going out. And what is coming inside? Net current asset is coming inside. Net current asset will come inside. To investment is cancellation of investment. Now when I'm showing original asset and liability in my book, should I show a dummy cover? Investment is what? It's a cover. It's a wrapper. I'm telling that I purchased 960 worth of net asset by paying 10 lakh rupees. I did not give the breakup. When I paid 10 lakh rupees, no, how much asset I got, how much liability I got, breakup was not given before consolidation. Now that I have shown breakup, is there a necessity of investment? No. So investment credit means what? From the balance sheet, I'm knocking off investment. Investment is asset having debit balance. The moment I gave credit here, investment in my balance sheet, consolidated balance sheet got knocked off. Okay, not okay. Online people, okay, not okay.
Okay, sir.
Others, please open your mouth and respond. So 80% of this belongs to us. 80% of this belongs to us. But we record how much full? 100%. To show that this 20% extra what I record is not belongs to me, I'm creating a 20% ka liability. So this is 100% ka asset. This does not belong to me. In that 20% belongs to somebody else. So 20% ka liability I'm creating here in form of minority interest. This is the crux of all the three entries combined together. Online people, okay, not okay.
Okay, sir.
Okay, sir.
So in this entire process, people, in this entire process, if you see, we have touched share capital ka ledger. We touched reserve and surplus ka ledger. We touched minority interest ka ledger. We touched goodwill ka ledger, investment ka ledger. Rest all the ledger, we just added as it is and did not do any minus. We just added as it is and left it. We didn't do any tinkering with those three ledgers. All the adjustments were done in other ledgers. Now, okay, not okay. Online people, okay, not okay.
Okay, sir.
Generally, nobody explains this. And I also don't want to explain this in future because this is a waste of time. But I'm explaining this for one and last time because if you understand the concept, because you should know that when I'm preparing balance sheet from what is getting subtracted or added, adjusted. So we know that no, inside you'll have a very good feeling that you've studied this subject in a very nice manner or you've studied this topic in a very nice manner. To give that good feeling, I've explained so much. But do you think that we have such a luxury of time that we can discuss this in all the question? Not possible. So this is one last time I'm discussing this in such a depth to give you a pulse that how this plus and minus is happening. Now, from next question onwards, we'll directly do the sum. Those four working note and just the balance sheet. This will make your answer very fast. Okay, not okay. Explanation part, okay, or should I explain anything else? Do you have any other doubts in your mind? Online people. This is your consolidated balance sheet. This is consolidated balance sheet. In this, 100% is of subsidiary asset and 100% is of consolidation asset. But in subsidiary, though we show 100%, in that 20% belongs to somebody else. To cancel the impact of that, we gave a liability in form of minority interest here. So from 100 on the asset side, if I minus 20 on liability side, remaining is what? 80% here and 80% here. So this is 80% of subsidiary capital, 80% of subsidiary ka profit. 100% holding ka capital, 100% holding ka profit. Any difficulty? Online people, any difficulty so far?
No, sir.
We'll take a break. Okay.
Sir.
Even I need a break. So we'll take a break of 5 minutes. We'll come back and continue with example 9, 10, 11. Thank you so much. Yes, people, welcome back from the break. So let's go to the next example 9. In this, again, AOP, cost of control, minority interest, and consolidated reserve and surplus along with consolidated balance sheet. Share capital is given 10 lakh, 8 lakh, reserve and surplus 6 lakh, 4 lakh, current liability 2 lakh, 3 lakh. PP 5 lakh, 6 lakh, investment again 80%, 7 lakh. Current asset 6 lakh, 9 lakh. H Limited acquired shares of S Limited on 1/4/24. 1/4/24. Piyush, balance sheet on which date? Very good. Sleep now. Balance sheet 31st March 25. Balance sheet 31st March 25. Last question. Balance sheet date 31st March 25. Acquisition date also same day, 31st March 25. Hence, you never had post-acquisition profit. Here, Lakshita, 1/4/24 acquired. Date of acquisition here. Balance sheet date here. Consolidation here. In between, what will come? Post-acquisition profit will come into picture. Same question with post-acquisition profit. Reserve and surplus on that date. On date of acquisition, reserve and surplus is 3 lakh. 3 lakh here. At the end of the year is how much? Donkey fellow. 4 lakh. So in between, what is post-acquisition profit? 1 lakh. Assume the above book value represent fair value. Okay, not okay. Prepare consolidated balance sheet. How many working note? 4 working note. First one, AOP. Analysis of profit of H Limited, H Limited, S Limited. Oh my God, I'm so sorry. Format I forgot. Particulars, percentage, pre-acquisition profit, post-acquisition profit, total. Next, what should I write? All reserve and surplus. How much? Total given
4 lakh.
4 lakh. Pre-given 3 lakh. Post is 1 lakh. Balancing figure. Online people, are you all with me or gone? Gone, huh? Pre-acquisition profit is also called as, I'm telling for the first time, capital profit. Post-acquisition profit is called as revenue profit. Pre-acquisition profit is not my profit. It is somebody else's profit. We are purchasing the profit. Any profit that we buy is called as capital profit. Any profit that has been generated by balance sheet item at the balance sheet level is called as capital profit. Any profit that is being generated by balance sheet item at the balance sheet level is called as pre-acquisition profit. Why I say pre-acquisition profit is a balance sheet item? Because this profit, you got it by paying it. You paid pre-acquisition profit ka amount to get the shares. So pre-acquisition profit is purchase profit. So the profit what I earned is not my profit. It is somebody else's profit, which I acquired by paying money. Hence we call this as acquisition profit, which is capital profit. Post-acquisition profit is the profit that belongs to me. I will take proudly to my P&L. So any profit that has been earned by P&L, which I can record in P&L, we call this as revenue profit. Okay, not okay. Shares forfeited. Shares forfeited. After reissue also, the amount is there in forfeiture account. What do? We transfer to the capital reserve. That capital reserve is called as capital profit. Any profit generated by balance sheet item at the balance sheet level is called as capital profit. Will you take that capital reserve ka profit to your P&L? No. It'll stay in your balance sheet only. We call that as capital profit. I sell this phone. I make profit. This profit is called as revenue profit, and it goes to my P&L. It goes to my P&L. It goes to my reserve and surplus. So pre-profit is called as capital profit, and post-profit is called as revenue profit. Okay, not okay? Online people, okay, not okay?
Okay, sir.
Okay, sir.
Now, what is the next step?
Okay.
H Limited,
Holding.
how much is the percentage? 80. H is called as majority interest. Next is others. How much? 20% only, no?
Yes, sir.
80. Okay. Others are called as minority interest, also called as non-controlling interest. Now do the bifurcation. 8 lakh ka 30%. Sorry, 3 lakh ka 80%. 2 lakh 40,000. 20%. 1 lakh ka 80%. 80,000. 20,000. Please tell me, this 240 is called as what? This 240 is called as what? Purchased profit. And this 80,000?
Earned profit.
Earned profit. This 240 will go in which working note? Working note number 2, calculation of goodwill and capital reserve. Unless until I pay this money, I will not able to get the shares. So I am purchasing this 240 rupees ka profit to get the shares. This 60,000 and 20,000 will go where? Working note number 3, which is minority interest. This 80,000 will go where? In working note number 4. Oh my God. Comfortable, not comfortable? Super. Next is what? Working note number 2. Very good. Calculation of cost of control, which is goodwill and surplus. Sorry, goodwill and capital reserve. Particulars.
Working. Working.
Working amount. If you observe the textbook answers, the working note is not like this. It's totally different. They've done a working note which is very difficult, complicated to understand. So what I did is I streamlined all the working notes. Whatever question you take, however you do it, you'll be able to comfortably do it. So I've set a nice format also for working note. And for working note, there's no rigid format that I say follows. They say that the balance sheet I want proper in the format. Working note, you are free to do however you want to do it. So I've given all of you a structured working note. if I give you one working note in different question, different manner, you'll get confused. So to avoid that confusion, I put efforts to again create a nice working note. Clap. Now, next, to calculate goodwill and surplus, surplus I bol raha hu. To calculate goodwill and capital reserve, I need two components. One is investment, second is net asset. How much is investment? I acquired 80% of investment by paying 7 lakh rupees. But what have you received it? Less net asset. I will see net asset as on the balance sheet date as on the date of consolidation. No, very good. On the date of acquisition. Share capital how much? Reserve and surplus how much? Share capital is 8 lakh ka 80%. Very good. 6 lakh 40,000. And then this is coming from your AOP. 60,000 rupees. Okay, not okay. Pre-acquisition profit is 60,000 rupees. No? Oh my God. 2,40,000. Very good. Only one person gave me a shocking reaction, which is Sakshi. Rest all there accepted what I said. Donkey fellow, be very careful. How much it is? 2,40,000 rupees. If I don't pay these two money, X will not sell the shares. So in total, what did we get, people? 8,80,000 worth of products you got. But how much did you pay? Only 7 lakh. Oh, what a deal, man. You paid less. 1 lakh? 80,000 you paid less. That is your gain. Capital reserve. Oh my God. Lucky fellow. 180 capital reserve. Paid less than the net asset acquired. Next is working note number 3. Calculation of minority interest. Do I need minority interest only on the date of date of acquisition, or I want total? I want total on the date of consolidation. So sometimes the question will be very cunning. In all the questions, you will calculate minority interest generally total for consolidation. Sometimes the question will tell that I want minority interest only for date of acquisition. So in that, what will you consider? Share capital on date of acquisition and pre-acquisition profit alone. Post you will not consider. These two alone you will consider. Because if you consider post also, then it becomes total. So from total, if I eliminate post, I will get share capital and pre. Total balance sheet में जाएगा. Now why I am telling this is because you come to illustration 1. Look at this. They've asked to calculate minority interest on the date of acquisition separately and on the date of consolidation separately. Most of the question we keep on doing this. Majority of the question is this. So your mind is trained. Okay, this is what is the minority interest on consolidation. But the moment people ask what is minority interest on date of acquisition, people start trembling. Oh shit, what is this? Those who know the concept, you will crack it. Got it, not got it. Format, please. Particulars and amount. In between working. Very good. Share capital. How much? 8 lakh into 20%. How much? 1,60,000. Then pre-acquisition profit, which is reserve and surplus. This is coming from your AOP. How much? 60,000. Sir, where in AOP, sir? Here it is. Pre. And this is 20 post. But I'll add these both. I will call this as minority interest on date of acquisition. How much it is? Sorry? 2,20,000. With that, what should I add? Post acquisition profit. Reserve and surplus. This also given in AOP. How much it is? 20,000. Very good. Total is 2,40,000 rupees. Total minority interest is 240, which is equal to 20% value. Working note number 4. Calculation of consolidated reserve and surplus. Now, working note 4 is your choice. Either you can do it like this here, or in form of notes to accounts. Reserve and surplus can note number 2. You can show this in your reserve and surplus note number 2 also. If not as working note, because in notes anyways you have to show no how much is holding a reserve and surplus, is it how much reserve and surplus of subsidiary you have added, so that you can show it in the notes directly itself. Choice is yours. Format please. Particulars amount. Here I want consolidated reserve and surplus. What is the total reserve and surplus that you will show in the reserve and surplus category of the consolidated balance sheet? Holding ka full reserve and surplus and subsidiary ka post acquisition profit alone will come. Okay, not okay. Reserve and surplus of H Limited. How much it is? 6 lakh given in the balance sheet of H Limited. Sorry?
Balance sheet.
This is balance sheet date. 31/3/25 it is. Now add post acquisition profit. This is coming from AOP. Coming from AOP. Here it is 80,000. How much it is? 6,80,000. Any problem? क्या हुआ लक्ष्य को कुछ तो चल रहा है दिमाग के अंदर. That 1 lakh profit post acquisition, in that 20,000 gone to minority, remaining is what, 80%. During break only we discussed. You only ask this question. So if post acquisition come, what will I do, sir? Now when I'm doing and telling her, she is blinking. Me. बताता हूँ ना, सब बताऊंगा सब. किसको पीना? मेरे को देखो, मेरे पास. Oh my God. Now, I wanted to keep the suspense. Shh. I want to keep the suspense, but Lakshita said I'm revealing the suspense. New. Now listen. With this, you'll add one more item. Capital reserve, which is coming from working note number 2. If goodwill is coming, you will not add here. Only if capital reserve comes, you'll add it. How much it is? 1,80,000. Total how much? 8,60,000. Very good. As on balance sheet 80, Babu. அப்ப அது 1/4 எங்க பறந்து போயிடுமா?
Date of acquisition.
A donkey fellow. Date of acquisition, capital reserve 1/4. I understood. Will they not come to the end of the year also? In between, who ate?
उसमें 1,80,000 पूरे starting year में मिला.
அண்ணே வரேண்ணே, எல்லாமே எக்ஸ்பிளைன் பண்றேன். இப்போ ஆட் மட்டும் பண்ணுங்க. समझाता हूँ, सब समझाऊंगा. ऐड तो करो पहले. 680 plus 180 is how much? 8,60,000. This is your total reserve and surplus. समझाता हूँ पहले, रुक जा, शांति रख. Now, consolidated balance sheet, can we do? I'm doing in short form, CBS. Any problem? Consolidated balance sheet. I will not put proper format. My intention is just to prepare the balance sheet. Formatting I'll take care of later. Is it okay? First, equity and liability. Under that, the first one is shareholders' funds. Under the first one is share capital. Always here the share capital will come off holding company only. What is it? Holding company ka capital is how much? 10 lakh. Next, B, reserve and surplus. Coming from your working note number 4. How much it is? 8,60,000. Second is minority interest. Madam, minority interest. Working note number 3. How much is minority interest? 2,40,000. Very good. Third is current liability. How much is current liability? Just add both of them. 2 plus 3. 2 lakh plus 3 lakh. 5 lakh. Any other liability, please? No. Tell me the total liability. 10 lakh plus 860 plus 240 plus 5 lakh. Sorry? 26 lakhs. Online people. Matching, not matching.
Yes, sir.
Very good. Second, assets. First one, non-current asset. Under that, A, PPE. How much? My PP, their PP also my PP. 5 lakh plus 6 lakh. How much it is? 11 lakh. Understand, this entire 6 lakh does not belong to me. 80% only belongs to me. But I'm recording full 100 percentage, which is wrong. To rectify my mistake, what I'm doing, I'm creating a liability of 20% here. Goodwill is there? Not there because capital reserve is there. Wow. Current asset how much? 6 lakh plus 9 lakh. Current asset 6 lakh plus 9 lakh. How much it is? 15 lakh. Investment will come, sir. Investment will come, sir. 7 lakh investment you forgot, sir. You'll get knocked off against the net assets. Against the net assets. 26 lakh match. Now tell me, Piyush. Balance sheet match हो गया. देखो क्या problem है अभी? Understanding problem. Come again from beginning.
Date of acquisition balance sheet is अभी हम लोग अभी 1 लाख 80,000 लेस पे कर रहे हैं तो उसी दिन आप रिकॉर्ड कर लोगे ना फिर बैलेंस
रिकॉर्ड किया रिकॉर्ड करने के बाद बैलेंस शीट तक आएगा कि नहीं आएगा वापस
आएगा
तो मैं लाया हूं देखो क्या दिक्कत है
बैलेंस शीट
कहाँ दिखाया
सर बैलेंस शीट में 6 लाख है तो इंक्लूडेड होगा ना कैपिटल रिजर्व उसमें जब क्योंकि 1 ईयर हो गया उस कैपिटल रिजर्व को
oh like that you are coming now what people are telling is that in this 6 lakh that 180 ka capital reserve is included donkey fellow this H limited ka data is coming from standalone balance sheet of H limited standalone ka data is there in the accounts consolidation ka data is there in Excel sheet entry where are we passing in the standalone books
जब acquired किया एस लिमिटेड तब उसको रिजर्व हुआ कैपिटल रिजर्व कैपिटल प्रॉफिट तो वो उस टाइम तो इंक्लूड करेगा ना कि रिजर्व
कहाँ included है that's what I'm asking VAT is included VAT this is here I'm taking data from here this is 6 lakh reserve and surplus of holding company coming from standalone financial statement this is the 4 lakh of the standalone
सर तो चलो स्टैंडअलोन वो उसका एक प्रॉपर सिर्फ एच लिमिटेड का बैलेंस शीट है उसके रिजर्व एंड सरप्लस
is it okay if I give you answer after 5 minutes let me do postmortem here I didn't want to do it since you're asking I'll do it I want to do postmortem with journal and ledger sorry balance sheet can I do it with this you'll understand 100% with this you'll understand I'm sorry online people I'm sorry recording people I didn't want to do it it's only because of few culprits again I'm doing postmortem I'm so sorry now ना 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 ना, ऐसे समझ गया बाबू ऐसे नहीं साक्षी बोले समझ गया मैं बोला नहीं समझा ऐसे थोड़ी होता है मैं समझाऊंगा समझाऊंगा बेटा मैं समझाऊंगा आई विल टीच no 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 no, don't ask don't
एच के बैलेंस शीट में ऑन द डेट ऑफ एक्विजिशन देने
नॉट इसकी रिजर्व में कैपिटल रिजर्व आएगा 1,80,000
तो कुछ मत पूछ मैं एक्सप्लेन कर रहा हूँ ना जब झगड़ा उससे कर वो देखो एक्सप्लेन कर रही है मेरे को क्यों पूछ रही है हाँ
डेट ऑफ एक्विजिशन
நீ விளக்கு என்ன நான் பேலன்ஸ் ஷீட் ஜெனரல் ரெண்டு தானே பண்ண தானே போறேன் நானு
डेट ऑफ
5 minutes
डेट ऑफ
5 minutes please everything I'm going to do everything I'm going to do நீ வேண்டாம் வேண்டாம் சொன்னா நான் போடுவேன்
जब वो बाइक लेगा भाई आज बैठ कमेंट करो
no you twist what do you call it touched my this thing teaching inner teaching I will not leave it all of you only oh tell me share capital fast holding company share capital you take a photo of this है okay वो है नहीं उसके सब दिमाग में है 10 lakh okay S limited 8 lakh total how much 18 lakhs
3 लाख
reserve and surplus
6 lakhs
you guys be sure among yourself don't confuse me 6 plus 3 how much it is 9 lakh okay then current liability
हाँ
4 लाख
इसका बोल
H का separate S का separate I'm asking 6 plus 4 4 only will come who said 3 donkey fellow so okay don't fight it's okay oh Oh, don't fight, don't fight. If you want to fight, one day I'll arrange separate ring. I'll wear that black and white t-shirt and come a referee. Then you guys fight. Wait, shoo. Don't fight, don't fight. Current liability how much? 2 plus 3. It's okay.
Right.
One person left the meeting telling me, I don't want to learn. I'm a yash போயிட்டான் என்னால உட்கார முடியாதுன்னு PPE how much? 5 plus 6 no. Ah no, first investment, original investment. Investment 7 lakh.
Current asset 6 plus
Current asset 6 plus 9.
50.
Okay, now tell me the journal entry to bring all the assets liability inside. PP account debit, current asset account debit, 2 share capital, 2. Okay, wait, we'll do first 2 current liability. Wait. 2 current liability, 2 share capital. Now here I'll split reserve and surplus into 2 parts. One pre, one post for convenience. Only then I can explain properly. Okay, not okay. 4 lakh is total. 4 lakh is total. In that pre, how much? Post, how much? So reserve and surplus pre, 2 reserve and surplus post. Any problem? Tell me the amount. PP 6 lakh, 9 lakh. Current liability 3 lakh. Share capital 8 lakh. This is 3 lakh. This is 1 lakh. Any problem? Now gradually these 3 we have to eliminate. Okay. So first I'll eliminate the 80 percentage. So share capital account debit. How much? 8 lakh ka 80 percentage. How much it is? 6 lakh 40,000. Wait. So here minus cancellation against investment. Against investment. I don't have space. I'm just writing in short. How much it is? 640. Okay. Then reserve and surplus, pre or post, or both will come. First pre separately. How much is pre? 3 lakh into 80%. How much it is? 2 lakh 40,000. Then reserve and surplus, post. I'm not saying, you're saying, okay? How much? 1 lakh into 80%. How much? 80,000. To what? Investment, how much? 7 lakh. Is this right or wrong? To capital reserve, how much? 1 lakh 80,000. Right or wrong? Why should I remove this post profit from reserve and surplus? Post profit belongs to whom? Post profit belongs to H only, no? I've added in H ka reserve and surplus. What is wrong in that? Let it be in that itself. Or should I remove it? That's what I'm saying. You removed it. So what should I do now? Will not write this? This you are telling, I'm not telling again. I just put one data into your mind, you got convinced. Think, introspect. Now total matching, not matching. Total matching, not matching. Perfectly it'll match. Now, in share capital, I'm removing 640. Any problem? In reserve and surplus, see, post ka profit belongs to whom? H limited only. Post ka profit 80% belongs to H only. So 80% of this will be in reserve and surplus only. 20% of this only I'll move to minority interest. Got it, not got it? 640 plus 240 total how much? 880. 7 lakh plus 180 is how much? 880. Okay, not okay. Now listen very carefully. My total investment is 7 lakh. My total investment is 7 lakh. This has got 2 components. One component is 6 lakh 40,000 rupees I paid to acquire capital. To acquire this capital 640, I paid 640. Any problem? Then out of this 4 lakh, 3 lakh is pre-profit. 1 lakh is post-profit. In that 3 lakh, 80% is pre-profit of my share, which is how much? 240. 20% belongs to minority, which is 60,000. To acquire the share of the company, I paid 7 lakh. What is the justification to pay 7 lakh? This 7 lakh, why am I paying? To acquire this share of 640 and to acquire this 240 ka profit. This 640 is X ka paisa. X is old shareholder. He paid 240 to S Limited. So that money I have to give him back. During that period, old period, he earned a profit of 240. That 240 also have to pay. So had I paid 640, 240, what is the total? 880. No goodwill, no capital reserve. But am I paying him 880? No, I'm paying only 7 lakh. So 240 ka profit I'm buying at 60,000 only. I paid 60,000 rupees extra to buy profit of 240. Got it, not got it? So how much profit am I making here? 240 minus 60. 180 is my profit. This profit belongs to whom? Holding company. Because holding company, very smartly they bargain with H. Sorry, holding company very smartly they bargain with X. Till that XX, your condition is very bad. You want paisa, no? I'll give paisa. How much money you want? Share capital ka paisa you take. Your profit is 240. I will not give 240. Now, if we don't give money to X, X is in very bad financial condition. He's in urgent need of money. He says that this 180 profit, pona poitable. At least give me my 60,000 profit because I have a medical emergency. I have to take care of my somebody. So we're taking advantage of this idella cooked up story. Nothing reality happened. I'm just trying to put a narrative in your mind. All I'm trying to tell is that 240 worth of profit you have purchased for 60. So in future, subsidiary company distributes the profit. How much they'll distribute? 240. How much will you get? 240. But in this 240, how much have you paid? 60 have you paid. So 180 ka profit, old profit you're getting free of cost. This 180 ka profit, who earned? Excess earned. But you're getting it free of cost. What happened, Lakshita? Why your face is so dull? Somewhere something is broken down. Where?
सर 180 समझ आ गया
हाँ.
अभी आप आगे जाओ कि वो 180 क्यों उसमें इंक्लूडेड नहीं है
कहाँ पे included नहीं है?
वो 6 lakh
Okay, let me complete this part. Then you come and ask me the further doubts. So far clear, not clear? So now what I'm telling is that I'll just erase this part. Okay. Can I say this 640 ka investment? I have to knock off investment against capital. 640 ka investment is knocked off against capital. Gone or not gone? Gone. Like that, I'm minusing, cancelling against investment. How much? Only 60,000 I'll cancel against the investment because 7 ke andar, out of 7, 640 is cancelled against capital. So how much is the balance in investment ledger? 60 is balance in investment ledger. That 60 I'll knock off against this reserve and surplus. So minus 60. Any problem? Got it? Plus, I have one more 180 because 4 lakh has got two components. One 3 lakh pre-profit, one 1 lakh post-profit. In this 3 lakh, how much I've knocked off against investment? 60. Balance is how much?
40.
Should be, is it 60 or? Wait. Correct. Rightly said.
This is 68.
I'm coming. I'll do it here. I'll do it here. 4 lakh is total reserve and surplus. In that, 3 lakh is pre-profit. 1 lakh is post-profit. 1 lakh don't touch now. In that, how much is belonging to majority interest? Holding company, 20%. 20% to minority. So out of this 4 lakh, I'm touching 3 lakh. Out of the 3 lakh, I'm touching the 80% now, as of now. How much it is? 240. So in this 240 ka reserve and surplus, how much is knocked off against the investment? 60,000 is knocked off against investment. Remaining is how much? 180, which I'm transferring to capital reserve. So I'm transfer to capital reserve. How much? 1,80,000. And since you have credited capital reserve, a new account will get created as capital reserve. Any problem? I'm doing it here. I don't have space. I'll do it here. Generally, all this goes in reserve and surplus, but I want to show separately everything. So 180 will get added to your capital reserve. Any problem? हाँ, एक ही बात ऐड होने वाला है. Okay, not okay. I'm telling that we are going to knock off investment. Understand? I'm repeating one more time. I want to knock off investment against reserve and surplus and capital. Out of 7 lakh, how much is knocked off against capital? 640 is knocked off against capital. 640 investment, 640 capital. How much is balance in investment ledger? 60,000. This I should knock off from reserve and surplus. Which reserve and surplus? Pre or post? Pre. Now come back here. In this 4 lakh rupees, I'm bifurcating pre separately, post separately. Out of this pre, 80% belongs to holding, 20% to minority. Yes or no? So what is 80% of 3 lakh? 240 ka profit I'm buying. By paying how much? 60. So this much I'll knock off against investment. So my investment becomes zero now. But still I have 180 in my reserve and surplus, which I'll transfer to capital reserve. So this is transferred to capital reserve. Doesn't matter. उसी में transfer हो गया. I could have left it as it is. But if I leave it as it is, you will not know what it is. So on purpose, I'm transferring to one more account called a CR account. Remaining will come one more time. See, you should appreciate. To do this calculation like this, it's very time consuming, very difficult. So all this calculation, I summarized in those 4 working notes. In those 4 working notes, you did this only, but without applying your mind. Here you are trying to apply your mind in each and every step. Got it, not got it. That's why it is a little painful now. If I give you formula format, you're very happy. But the moment logic is coming plus and minus, the complication starts. That's okay. That is the starting stage of understand. Complication is the early stage of understand. Okay, not okay. Now, I'm telling that in this 4 lakh rupees, I've transferred 60,000 against investment. I've cancelled it. Remaining 180 I've transferred to capital reserve. So 60 plus 180 both put together is how much? 240. This is pre-profit ka 80%. 20% where will I transfer to? Minority interest. So I'll minus transfer to minority interest. How much? 20% of 3 lakh, which is how much? 60,000. Now, if I add all the 3 put together, how much it is now? 3 lakh rupees, which is complete pre-profit. So in the minority interest, what will get added? In minority interest, the first item is add what? Pre-acquisition profit. How much? 3 lakh ka 20%, which is 60,000. Got it, not got it? Got it, not got it? The one which I minus is subtracted here. Journal entry is not yet passed. I'll pass it later, but for your understanding, I did minus now itself. Now, what am I left with in the reserve and surplus? From 4 lakh, if I minus these 3 amount, 3 lakh is gone. What is left? 1 lakh is left. Is this entire 1 lakh belonging to holding company? No, in that 80% belongs to holding company, 20% minority. So I'm minusing transfer to minority interest, which is 20% of 1 lakh, which is post profit. If I minus 20,000, what is the balance? 80,000 is what? Post profit of holding company. Post profit of holding company. So come to minority. Add post profit of 1 lakh into 20%. How much it is? 20,000. Got it, not got it? Lakshita still here and there confused.
नहीं सर वो आप स्टैंडर्ड का बोला था अभी हम
वो उसको मैं क्या बोल रहा हूँ ना
हम वो एस लिमिटेड का 3 लाख में ऑलरेडी 20% गया मतलब उसके लिए और जो बचा 2,40,000 उसमें से
60,000 knocked off against investment.
उसके अकाउंट में 1,80,000 ऐसे का वैसा है. जब हम कंसोलिडेट करेंगे तब वो
ऐड होगा. Correct. So far clear, not clear? So 80,000 rupees is what? Post acquisition profit, which is a part of reserve and surplus. This 180 also is a part of your reserve and surplus. So what is your total reserve and surplus of subsidiary now? 180 plus 80, which is 260, plus reserve and surplus of holding company. How much it is? 6 lakh. So 6 lakh plus 80 plus 180, how much it is? 860. Perfectly matching. Here also we got 860 reserve and surplus in your working note number 4. So this 860 ka breakup is what? Breakup means the breakup of accounts, not your breakup, what you're thinking. Holding company ka reserve and surplus how much? 6 lakh. Post profit how much? 80,000. The money that you did not pay, but you are still earning the profit. Capital reserve, which is very good, 180. So 180, whose profit it is? X ka profit is its hard work. X का हार्डवर्क का पैसा, who is getting? You are getting it. So that become your money. So what is your total profit? 860.
होल्डिंग कंपनी का 80% क्या है? क्योंकि रिजर्व एंड सरप्लस में
You're talking about post वाला part?
नहीं ये
6 lakh.
पूरा रिजर्व सरप्लस जो है
No. होल्डिंग कंपनी का 100% आएगा. होल्डिंग कंपनी का 6 lakh प्रॉफिट इज 100%, no? हाँ, because 20% is minority, no? Separately I have to show it. See, when I say reserve and surplus means it is our profit. Lakshita, listen here. This reserve and surplus is my reserve and surplus, my profit. From this, I'm segregating minority ka profit separately and showing because it is something to pay to him. Correct. 20% goes to minority. Perfectly you said. Now, can I go forward? Now, coming back. Third entry. Share capital have closed only to the extent of 80%. Now, to close down to the extent of remaining 20%. So, share capital account debit. 8 lakh into 20%. How much it is? 160. So, come back here. Minus transfer to minority interest. How much it is? 160. So, total is how much? Minus 8 lakh. So 8 lakh minus 8 lakh, it becomes 0. So 10 lakh plus 0 is how much? 10 lakh will come. Okay, not okay. So this 8 lakh is knocked off. 640 against investment and 160 is transferred to minority interest. Like that, reserve and surplus also, you have to transfer to minority interest. How much you transferred? 3 lakh at 20%, which is 60,000 I have to transfer. So reserve and surplus. Which reserve and surplus? Pre. Very good. Pre. How much it is? 3 lakh into 20%. How much it is? 60,000. This 60,000 is sitting in reserve and surplus of holding company. If it is my profit, let it be in reserve and surplus. But is it my profit? No, it is somebody else's profit. So I have to remove it from the reserve and surplus and take it to the minority interest as liability. Remove from the profit and show it as liability. Got it, not got it? How much it is? 2 lakh 20,000. 2 lakh 20,000. Now the question is, post ka profit should I remove and show or not? Yes. So here post ka profit will come. Reserve and surplus post, how much it is? 1 lakh into 20%. 20,000 I need to remove, which is already done here. 20,000 is removed here, which is 20,000. So 2 lakh 40,000. Got it, not got it? So 240 is sum total of 3 items. Remove this from share capital, pre-profit, post-profit, and add all the 3 in the minority interest. That is what we have done here. Share capital how much? 160. So from share capital, I removed that and I added in minority interest. From reserve and surplus post, I removed and added in minority. From reserve and surplus pre, I removed and added in minority. Okay, not okay. So total is how much now? 2 lakh 40,000.
basic symbol play.
Make my flow to khatam kar do. Now tell me people, what is the balance in share capital? What is the balance in share capital? 10 lakhs. What is there in reserve and surplus? Holding ka 6 lakh. Holding ka 6 lakh. Subsidiary ka 80,000 is there. Subsidiary ka 80,000 is there. Plus capital reserve 180. So 6 lakh is the holding ka profit. 80,000 is subsidiary ka post profit. And 180 is capital reserve, which is X ka pre-profit, but we got that now. So both put together how much? All the 3 put together how much? 860. Minority interest how much? 240. Same thing we got here. 10 lakh, 860, 240. Rest all no problem. Just addition only. Current liability addition. Rest all is just addition. Rest all will come as it is. 5 lakh will come as it is. 11 will come as it is. Investment we knocked off against net assets. That is share capital and reserve and surplus. 15 lakh will come as it is. So the entire drama is here only that from share capital, we are knocking off something against investment and something is transferred to minority interest. So 80% of share capital is knocked off against investment and 20% is transferred to minority interest. In reserve and surplus, I'll do it one more time here. 4 lakh is the total reserve and surplus. In that, pre is how much? 3 lakh. Post is how much? 1 lakh. In that, 80% is of holding company, 20% is of minority interest. So this should go to minority interest. And this holding company ka 80% is how much? 240. In this 240, against investment, I have knocked off how much? 60. And balance is my capital reserve. How much? 180. And 3 lakh at 20% is how much? 60,000 is transferred to minority interest. Out of this 1 lakh, 80% is holding company. How much it is? 80,000. Let this be in reserve and surplus itself. Do not minus it. And 20% is how much? Others, which is minority. So this transfer to minority from reserve and surplus. This is the summary and crux of reserve and surplus. Share capital, you understood. If you want to know one more time, sit at home, do the entire balance sheet, means this add and minus balance sheet on your own. Then come back and refer this video one more time. Like Muska, it will be clear.
ऐसे समझ आ गया बैलेंस शीट की तरफ से चलो तो पहले पूरा 20% जो माइनॉरिटी को देना है वो पूरा दे के जो बचे वो 80% होल्डिंग कंपनी का ही हुआ
Come again, which part I'm talking about? 3 lakh pre or post?
पोस्ट तो छोड़ो
हाँ, pre 3 lakh is there. हाँ.
प्री का जो है ना 3 लाख
Yes, pre 3 lakh is there.
उसमें
20% minority देके खत्म करो. Yes.
जो बचा वो होल्डिंग का ही
नहीं, in that investment 60 और knock off, no. तो उतना तेरा reserve and surplus गिर जाएगा. Because to that extent your investment will come down and reserve and surplus will come down.
ठीक है होगा ना
हाँ, correct. See, here capital reserve came okay. If goodwill comes, then what scenario changes? If there's no goodwill, capital reserve scenario will be different. So you can't buy it like that. तब तीनों आएगा. थोड़ी
ये तो सिर्फ अंडरस्टैंडिंग
whatever guys we have done, the complicated part, to simplify it, I gave you 4 working note. So what we did here, this drama is what we have done in working note 1, 2, 3, 4. So I gave you the logic also. In this format, logic, there's a lot of confusion. To avoid confusion, I gave 4 working note ka format. If you follow that format, automatically balance sheet will tally. Now, chumma people will not say consolidation is tough, no? And that too, tough part is not even come. Because this part nobody explains. So people never have doubt in this part. Problem will come only in masala question. It is out of my interest I gave you the logic. We discuss so much. Nobody will discuss all this. Everybody will discuss a working note with that balance sheet over. Game over. Now can I go to the next question?
Huh?
What?
Yes, sir, next question.
My throat is fine. I can survive for one more question. Mind is not working. Kiska? Oh my God.
वो सब पेन आने लगा है इसमें
Arey, easy question I'll give, man. You will be very happy now after this. I'll drink. Everything I'll drink. Wait, no homework. You guys are very immature to take homework. You can't tolerate homework right now. Wait. Question 10. Question 10. Any difficulty? Take a photo of this. Fast. PDF में वो नहीं है बाबू. Additional information. H acquired shares of S Limited on 1/4/24. Reserve and surplus on that date 1 lakh. Assume all the book value represent at fair value. Prepare CBS. This you want me to give homework? Same question. No masala. Just that the investment I've changed it to 75%. And I've increased the value of investment. So you'll get, instead of capital reserve, will get goodwill. Rest all the same. Try this as homework. Okay. Now, question 11 also homework. Question 11 also homework. I'll put the PDF in the group anyways. 11 is homework. This is same like your question number 8. Balance sheet date 31st March 25. Acquisition date also 31st March 25. No post. This is also homework. No Ramayan. Oh my God.
सर ये टिकट भेज
Yeah, I'll share it. Now, example 12. With that, I'll stop today's class. No, target for today is not over. After example 12, my target was to finish illustration 1 and illustration 12, if I'm not wrong. So 2 questions were short. It is little bit different. Almost same only, but little different. Anyways, example 12, last question for the day. Share capital is given, reserve and surplus is given, liability given, PPE given, current asset given. Additional information. H Limited has power to compose. Oh my God. H Limited has power to compose the governing body of S Limited. Prepare CBS. No investment, no investment, no investment. So no investment, sir. So no consolidation, sir. Then consolidation is done wherever the company is got holding and subsidiary relationship. Now the question is S Limited the holding company of S Limited? For you to become holding company, you have to satisfy one of the two conditions. One, voting power should be more than 50%, or you should have power to compose, or it is not, and it is or. No investment, no voting power, but still holding company because we have power to compose. Any difficulty? Now, no humbug. I'll kick you, I'm telling you. Though I'm not donkey, but I'll kick you very hard. Wait. Tell me, working note one, fast. Lux, for this, no brain required. Even brainless people can do this. AOP. Format, fast. Particulars. Percentage. Pre. Post. Pre का another name. Pre का capital profit. Post का another name. Very good. By heart and nicely. Know the concept. Oh my God. All reserve and surplus. How much? Oh, sorry. I have to open Excel, no? Date of acquisition, 31st March 25. Date of balance sheet, 31st March 25. Post will not come. So entire 4 lakh is pre. Four lakh, 4 lakh. Next. H Limited, 0%. Oh my God. Others, minority, 100%. 100% link minority. This is a majority. Oh my God. So even though they have 100% share, you're telling no control. No control with them. Yes. So they are called as non-controlling interests. How much? 4 lakh and
0.
cover பண்ணாதடா டேய். கவர் பண்ணிருக்காப்ல. First time is given the right answer. That too संभाल से fine. नहीं बहुत सही जवाब दिया. Working note 2. Calculation of cost of control. I will not all that. Investment 0. Minus net asset. ಏನಪ್ಪ percentage ಇಲ್ಲಿ எப்படி என்ன whatever capital you take multiply 0%. 0 only you'll get. People are thinking what sir will multiply with. Share capital is how much?
0.
Not donkey for share capital is not 0. Share capital is 5 lakh. Drink water first. 5 lakh into 0% is 0. What is reserve and surplus? 4 lakh into 0% is 0. So goodwill capital reserve 0. Oh my God. Working note 3 also 0, sir. Tell me. No? Share capital on date of acquisition. How much? 5 lakh into 100%. 5 lakh. Add reserve and surplus on date of acquisition, which is pre. 4 lakh into 100%. How much? 4 lakh. 9 lakh is called as how much nice you by hearted, no? Oh my God. Working note 4. As if I'm giving exam, I'm doing so much work, hard work, and you guys are chilling, sitting and nicely, huh? करेंगे. Calculation of consolidated reserve and surplus. Reserve and surplus of H Limited. How much it is? 6 lakh, हाँ. आपके मतलब फ्री कभी आता नहीं है इसके अंदर. इतना भी जल्दी नहीं जाना घर को. Post acquisition profit of subsidiary limited 0. 6 lakh is reserve and surplus. No problem. Okay, balance sheet. Equity and liability. Shareholders funds. Share capital how much? 10 lakh of the holding company. Very good. Reserve and surplus. Working note number 4. How much it is? 6 lakhs. Wow. Working note number 3. Minority interest how much? 9 lakh. Oh my God. Third, current liability how much? 2 plus 3, 5. What a day. 2 lakh plus 3 lakh. 5 lakh. Total how much? Huh? 30. Okay. Next. One bola asset. Assets. Non-current assets. In that PPE. 10 plus 6, 16. Oh my God. I think remaining consolidation you're capable of handling yourself. Remaining. Current assets. 8 plus 6. Wait, I'm not done. Very important. Go and talk. Balance sheet tallied. Oh my God. Target for the day is not achieved. Sherry. Next class on Monday. कल छुट्टी दिया ना. I went to doctor and came already. Monday I am fully ready. बोलता हूँ मैं. Recording में नहीं बोल सकता. Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. All 6 days you have class. Next week we are doing heavy lifting. பொங்கல் எல்லாம் மஜா வரும். People will do பொங்கல். We'll do in class பொங்கல். Movie we can plan provided releases. Emma, அது release ஆகணுமா படம்? Where is she sitting? Okay, now we're meeting on Monday, 12 p.m. sharp. When I say 12 p.m. sharp means I'll start, make them what? Even if you're there or not at 12 p.m. sharp, I'll start. Today I waited for 15 minutes for all of you. Monday I will not wait, I'm telling you. So guys, that's all from my side for this session. That's all in the Monday's class. Until then, bye-bye. See you. Take care.
Thank you, sir.
Thank you. Bye.